I'm Alan Kenny, editorial director with REIT.com, and I'm joined by Sunder Raman, whole-time member of the Securities and Exchange Board of India. Sunder, we're going to talk a little bit about India's efforts to establish a REIT regime. So can you tell me, what's been the greatest challenge in terms of launching REITs in India?
REIT as a product was not available in India, and there was no framework for that. So the main challenge in establishing a framework for a new product is to know what is happening in different jurisdictions of the world, what are the best practices prevailing elsewhere, and how to actually dovetail some of those into the Indian conditions so that actually it's easily applicable and easily implementable in India. This was one challenge, that is establishing what is best in the Indian conditions from a regulatory perspective. The second challenge was that REIT is very intimately related to the tax situation. So while the regulatory prescription was widely welcomed as a very sensible, good starting point, universally accepted, there were a number of tax issues which were raised by all the market participants, saying some of these could be actually, the scheme could not start at all if some of these tax issues are not sorted out. So the Indian government in 3 consecutive budgets, 2014, 15 and 16, has simplified the tax structure to this virtually to the satisfaction of everyone. So now we are in a position where the regulatory framework is in full place, and then the taxation issues have all been dealt with.
You mentioned that you drew on the experiences of other REIT regimes. How closely is the Indian REIT regime going to match the US model, and were there any experiences that you kind of drew on there in setting up the Indian REIT regime?
There are a number of very similar features between the US and the Indian Indian regulations as it exists today. For instance, as per the US regulations, 75% of a REIT has to be invested in property. In India, it is, as per our regulations, it is 80%. And in the USA, 90% of the income has to be distributed as dividends, and so is the case with India. So for instance, these two are very major common points between the US and the Indian regulatory perspective today. One major difference between the US and the Indian regulations as it exists today is that predominantly in the US REIT market, it is a concept of internal management. So while in India, it is actually the concept is external management.
Do you think that internally managed REITs is something that the Indian market would accept or be interested in?
Right now, the Indian market is very happy with what we have proposed in the regulations. And proof of the pudding, one of the applications is shortly going to be made. And the general estimates are that within, say, 2 or 3 years, the size of the market, REIT market in India will be not less than 20 billion. So the external management concept in India has been accepted, but there is a particular type of request that we should be in a position to consider internal management as an alternative down the line, which we are fully not averse to it at all.
So how do you see the introduction of REITs then impacting India's capital markets?
The real estate market in India has been a bit unregulated type of thing for too long. And now in India, a recent legislation has been passed at the federal level controlling the real estate activities. So best practices are going to come in. In India, there were not much of stock of REIT amenable assets. I described it that way earlier. But now, of course, there is latest estimates are that almost 219 million square feet in India is right now available, which could be the subject of conversion into REIT structures. So there is a tremendous potential for the growth of REITs in India. So there is a good chance for a foreign investor to take part in what is happening in India in the real estate and infrastructure sector. So from a developer's point of view, it's going to be a good way to raise capital. So there are investors, there are developers, and there is a good stock of REIT amenable assets. So all the three elements which are required for a REIT industry to take off is all present in India at this point of time. So we see a good future for this sector.
Well, thank you so much for your time.
Thank you.
And for more on this and other REIT news and analysis, be sure to visit REIT.com.